With me here in the studio today from Roskill, I'm joined once again by Nils Backeberg. Nils, good to see you. Good morning.
Hi Andrew, thanks for having me again.
Look, pleasure. We're talking your recently released Chromium outlook report through to 2029. Before we talk some of the detail, remind us Chromium, some of its main uses.
That's right. So Chromium can be quite simply summarized by stainless steel as its main application. Really, when we're looking at the industry, nearly 80% of chromium units supplied to the market are consumed in stainless steel. If we take other steel applications into account, we're looking around 95% of the market. So really, when we're trying to understand the fundamentals of the chromium industry, we are looking at the steel applications. Beyond stainless steel and steel applications, we also have refractories and foundries, as well as chemical and chrome metal applications. Chemical and chrome metal really forming some of the niche markets in chromium.
And the chromium price of late experienced a bit of volatility?
That's right. So about at the end of 2006, we moved into a period of some volatility in the price market for chrome ores specifically. And between end 2016 to mid 2018, we saw an increased volatility over that period, and that was really encouraged by initially demand coming out of China from the stainless steel industry, and we saw this really encourage more material being pushed out into the market. And it's really important maybe here to just re-emphasize the main supply chain for chrome ores into stainless steel is really related to Chinese demand and South African supply. There are ores all over the world, Kazakhstan, Turkey becoming some of those key producers and players, also using captive ferrochrome in their production, but really when we're talking about the spot markets and the trade flow, we're talking about South Africa to China.
Right.
And the increase in supply that was encouraged over 2017 saw really a surplus market being established. So we had an extra 2 to 3 million tons come online in 2016 and 2017, encouraged by that price movement. And then despite an existing surplus, we saw this oversupply continue into 2018 with again another nearly 3 million tons coming onto the market. And that has really solidified the longer term trend now of excess chrome ore availability on the market, and that has taken away that volatility in the price market. So since mid 2018, prices have been relatively flat. And as of April this year, we saw that prices of ferrochrome and chrome ores have really been following a downward trend, back to round about the price levels where we were back in 2016, where prices bottomed out. So firstly, to consider where we are at the moment and what are the fundamentals causing the current price scenario. The first thing to think on is that demand from the stainless steel industry. Now, over the last 2 decades, we've seen stainless steel really grow at double-digit rates of an average of over 10% per year, and really driven by that demand in China that I've just mentioned. So that has been them establishing their stainless steel production industry as well as captive ferrochrome industry, sourcing chrome ores predominantly again from South Africa. Now, more recently, we are seeing some fundamental changes in the demand from stainless steel for chromium, and that is within a slowing growth rate in the industry. We are expecting to see a 2 to 4% growth in the stainless steel industry over the next decade. So this is still a growing market, but albeit a much slower rate. So the chromium supply industry needs to readjust and accommodate this slower growth. So that is one of the key fundamentals to keep track of, that we are seeing slowing demand causing less requirements for chrome units at the moment. Then coming back to this oversupply of chrome ores, one of the key topics in there has been the supply of UG2 chrome ore. Now, the UG2 is a geological formation or unit within the Bushveld igneous complex in South Africa, and that has been targeted for platinum group metal, as a platinum group metal resource. And really, the platinum industry has seen less than positive market sentiments over the last few years, and really within that, platinum producers have looked to improve their balance sheets by recovering chromium. Now, UG2 chrome ores are typically priced at about a 10% discount compared to primary chrome ores in South Africa, although as a byproduct credit to platinum industry, they can operate at higher discounts. Now, this has been one of the key fundamentals as the platinum industry has increased the recovery of chromite as a byproduct, has really solidified this downside price pressure that we're seeing on the ore side. And for this year, we're expecting to see another 1 million tons of UG2 chrome concentrates come onto the market. And this is related to consolidation in the industry, like Sibanye-Stillwater and Lonmin merging their operations together, and focusing on improving recoveries of chromite out of their concentrate in the byproduct.
And longer term, over the next decade, your expectations around supply and demand?
Yeah, so staying with the fundamentals of stainless steel, we're still talking about a growing market of 2 to 4% over the next decade. So the fundamentals for the requirements of chrome units is still there. So despite being in a surplus market at the moment, we do need to see supply keep pace with growing demand over the longer period. On a shorter term basis, if we look at consumption in China, we're talking at over 1 million tons per month. Focusing on domestic demand in China, we can see that consumption is round about 1 million tons per month. And port stocks held in the Chinese ports is sitting at just below 3 million tons. So any short-term disruptions to supply can quickly filter through the demand markets. But really thinking about what are the potentials, or what is the outlook for chrome ore prices and chrome industry in general, is at the moment related to the performance of this UG2, that's lower cost chrome concentrates on the market. And as I mentioned, that is directly related to the performance of the platinum group industry. These are deep mines that are extracting for platinum group metals and then can use the tailings for chrome concentrate recovery. Now, since 2011, UG2 mining for platinum has not increased in volume, give or take. So this means that the increased UG2 supply on the chromium side is really related to an increased focus on recovering that material. But there is a certain cap associated with that, and based on our estimates, we expect that the growing demand will supersede the potentials, if you will, of UG2 by the later half of the 2020s. So let's say UG2, in a theoretical sense, can accommodate growing demand over the next 5 to 6 years, beyond which we will see a growing requirements of other chromium sources redirecting the focus of demand. So that might be a change that we expect to see over the longer term in the chromium industry, where lower costs might take away the downside pressure on prices and switch that back to primary ores.
What about the fundamentals for ferrochrome? Are they somewhat similar?
Absolutely. So ferrochrome is the intermediate product that takes chromium units from the ore into stainless steel. Typically, we are talking about ferrochrome capacity. There's more than enough capacity on a global level to accommodate demand. So any short-term supply on the ferrochrome can quickly be adjusted within a medium or shorter medium-term sense. There are some interesting fundamental changes in ferrochrome where we are seeing integrated stainless steel plants being developed. They have been developed in China, and one of the more recent ones that's getting attention is the one in Indonesia in Tsingshan. So Chinese-owned stainless steel plant, and the plant is designed to incorporate chrome ores directly charged as molten chrome ore into the steel mill. Now, at the moment, that plant is still using ferrochrome because most of the cost benefits are related on the nickel side rather than chromium. However, there is still a cost opportunity there that allows these integrated plants to produce stainless steel at a lower price. On top of that, the electricity price has been something that's been getting a lot of attention on the ferrochrome side. We saw Chinese looking at the electricity price or not enough capacity in Inner Mongolia. And really, the main interest has been, or the main concern has been on the South African side with regards to Eskom, the local utility that provides or supplies the electricity, increasing tariffs. And so they announced earlier this year that they were to increase tariffs by another 23% over the next 3 years. So if we look back about a decade, South Africa had one of the lowest cost electricity prices for ferrochrome producers, so highly competitive in that stage, but it has really already lost most of that competitive advantage. Since 2011, a depreciating rand has mitigated some of the increasing costs because the South African ferrochrome is an export-based market. However, now looking at another 23% increase in electricity prices has the potential to affect the cost productivity of South African producers. especially even though China is the major supplier, South Africa does still produce around about a quarter of ferrochrome supply to the market.
Just remind us, you did touch on it at the start, but some of the wider applications here, not just for ferrochrome, but chromium itself?
Yeah, so chromium is used in refractories and foundry applications, and these applications aren't seeing the same sort of positive or growth market that we're expecting in steel industries, and this is really related to changes in the automotive industry. But more interestingly, I find is the chromium metal markets is maybe worth mentioning here. So last year, the chrome metal market increased significantly in terms of supply, and really had its the chrome metal price really had its own price scenario, which was not related directly to chrome ore prices. Over the longer term, they are related. However, middle of 2018, there was some chrome metal taking off of the market through off-take arrangement agreements, and this really caused a price spike, but all of that gain has now been lost. Now, chrome metal is really used in superalloys, which again is then used in things like aerospace applications, and we're expecting some healthy growth in these industries moving forward. And chromium metal or chrome metal is going to take part of this story. And really here at the moment what we're seeing is chrome metal prices have dropped down, and one of the feed materials used in chrome metal is chrome chemicals. So they tend to follow similar trends, and right now what we're seeing is those trends have diverged, and if you will, the ratio of those two is such that the chemical price is higher than the opportunity cost for chrome metal. So what we're expecting to see over the next half of this year is that these two prices of chrome chemicals and chrome metals will see some adjustments to come back to their long-term average or ratio, as you will.
Very good. Nils, good to see you. Thanks very much.
Thanks, Andrew. Cheers.